Now, Financial Derivatives says they expect Nigeria's headline inflation for May to hinge up to 11.38%. I have with me in studio Damilola Akinbami. She's the head of research at Financial Derivatives, and she joins me to discuss the outlook for inflation. Thank you so much for joining me on the show today.
Thank you, Kenneth.
All right, so let me get your thoughts on what you think is driving inflation and why you came up with that projection.
Okay, so presently, what we think is driving inflation is actually more of seasonality factors, because everyone knows that this is the planting season. And during the planting season, what you see is a lot of shortages in terms of food output and what have you. So that's what we're seeing now, because other factors like, for instance, demand pull factors, in the sense that whether money supply is increasing, has been muted. If you look at what the CBN released in its monetary policy communique for May, the annual growth rate for money supply when analyzed about 5% compared to its target of 12.99%. So we know that in terms of money supply impacting on inflation, that has been relatively flat. If you also look at maybe cost push factors, diesel is the fuel that is used to power the trucks that bring in the goods from the farmlands to the market. That has been stubbornly high at about 230 to 40 naira per litre. That's the retail price. So what we're seeing right now is the seasonality factor that is still in place. And if you go to the market right now, commodities such as tomatoes, it's very expensive. Pepper, in fact, it's scarce. So for you to even find commodities like that, you have to pay a premium for it. So it's not unusual. Usually during this period, between April, May, June, you're going to see that impact of seasonality play. And that's why right now we're forecasting a marginal increase to about 11.38% in the headline inflation.
But what's your call for food inflation then?
So for food inflation, we're also expecting, so like I mentioned, some of the commodities that are increasing. So what is actually driving headline inflation right now is more for food inflation, and that's what is going to lead this increase in headline inflation. Meanwhile, core, which is headline inflation less seasonalities, is actually going to flatten out or even maybe decline a little bit, because if you look at the factors that actually influence core inflation, such as the exchange rate, it has been relatively stable at 360, 361 naira. So imported inflation has been mild. So if at all it's the food inflation that is going to increase, you can see the price of yam too has increased. So that is actually the main issue. And the variable to even watch out for is actually the month-on-month inflation, because that is a better reflection of market realities. And we're projecting that that would increase about 14.04% when annualized. And that is significant, because it's even higher than the headline inflation. So that's what we're looking at. That's what we're projecting.
Interesting you mentioned the month-on-month, because like and giving a better reflection, because I'd like you to speak more on that point, because and how, you know, because when you look at the inflation, when you look at how the numbers have been so far from May last year, we've seen that it's just been coasting around 16.1%, thereabout, until where we are about 16.8%. We've seen the second straight rise for inflation this in the last 3 months. You know, and I'd like you to speak to those points.
Yes, so like you rightly said, headline inflation has been relatively, at least compared to last year, the inflation rate trend has been declining. But in the last couple of months, we've seen it come from 11.25 to 11.37, down to 11.25, then back to 11.37 as at April. And now in May, we're projecting that increase to 11.38. So it's been coasting along that level. So we think it's going to flatten out. But month on month has actually been consecutively increasing for the past 4 months. So that's why I said that is actually the indicator to look at. Because if you just look at the headline inflation and base your projections or expectations on that, you might not get a true picture of it. Because if you plot the graph, you see that it's been relatively flat. But if you plot the month-on-month inflation against the headline inflation, you see that trend is clearly depicted, that inflationary pressures exist and they're heightening. And we could actually even see that progress even further. Because bear in mind, some other factors haven't kicked in yet. Remember, I mentioned the demand pull effect in terms of money supply has been flat. Minimum wage, I don't think that has been implemented yet. And once that kicks in, definitely there's going to be an increase in money supply. Purchasing power would increase, and you see increased demand for output, and that would push up prices.
Yeah, because I was going to go to purchasing power and then look at the consumer confidence index and what you think about the Nigerian consumers.
Yeah, so the Nigerian consumers, I think the expectation right now is in line with what we're projecting, that inflation expectations, inflationary pressures pressures are still there. And this is a summer period. So you know that there's going to be summer travel, meaning that there's going to be increased demand for Forex. Hajj is also coming, meaning increased demand for Forex. So once demand pressures persist, you could see the Naira weaken a little bit. And if the Naira weakens, the imported inflation that I mentioned earlier that was relatively flat begins to increase. So that also adds to the inflationary pressure. So I believe consumers and also manufacturers are factoring that in. And if you look at the Purchasing Managers Index for the month of May, it dropped sharply from about 58 to 50. And that's actually significant. So it actually indicates that the second quarter GDP growth might not be as strong as we anticipated. So I believe both consumers and corporates are already picturing that, oh, in this, at least for the second quarter, looking at both output and inflation, that it's not going to be as positive as we anticipate.
All right, then let's look at how, from the last MPC meeting, we had the central bank talking about the fact that they would like to see more credit, improved credit going to the private sector. When we have that scenario in place, and I'm trying to first look at what shape that would take, in how they would intervene to get the banks to lend more to the private sector. But then if we have that coming in, what impact do you see, how do you see that impacting inflation going forward then?
Okay, so first of all, we know what the MPC did during the March meeting. It cut the monetary policy rate by 50 basis points to 13.5%. So what it did, it adjusted the price downwards, but it tightened supply. So what we're seeing, like, the CBN has increased its OMO auction, so thereby sucking in funds. So the impact of that rate cut has not been felt, because one would have expected that if the interest rate declines, you should see more credit being released to the private sector. You should see more liquidity in the system, but we haven't felt that yet. So presently, the impact has been mild. So in the next MPC meeting, which is going to come up next month, it's highly unlikely that the CBN is going to make any move. It's most likely to maintain status quo. And why we're saying this is that they're going to look at some variables. So the inflation rate for May will be out by then. It's coming out next week, Monday. The inflation rate for June also will be out before the July Monetary Policy Committee meeting. So they're going to be looking at those variables. The second quarter GDP data may be out also. They're also going to be looking at the exchange rate, because it's one thing, the main objective of the central bank is to achieve price stability and also exchange rate management. So they're going to be looking at those variables. Anything that is going to affect that would be a major consideration for them.
All right, then. Thank you so much for your time on the show.
Thank you, Kenneth.
All right, and I've been speaking to Damilola Akinbami. She's the head of research at Financial Derivatives.